mobile video lectures. Today I'll be treating with us petroleum profit tax and how to compute petroleum profit tax as a student. The applicable law for the computation of petroleum profit tax in Nigeria is the Petroleum Profit Tax Act 1959, but was reenacted in 2004. That is under the P13 LFN 2004. Now, before we go into the computation of petroleum profit tax, there are some brief introduction I would like us to know about petroleum profit tax. Under the petroleum profit tax, we have two activities there. We have the upstream activities and we have the downstream activities. The upstream activities start from the extraction stage to the refinery stage, while the downstream activities start from the refinery stage up to the stage where it is being refined into its usable, like consumable goods, like petrol, diesel, kerosene, engine oil, stuff like that. The Petroleum Profit Tax Act in Nigeria deals with the upstream activities alone and not the downstream activities. The upstream activities uses the PPT Act, which is for this course, but the downstream activities is governed by the Company Income Tax Act, CITA. So that's that about that. Now, the basis of assessment or the accounting period for petroleum profit tax. Remember, I said we'll be treating upstream activities. Petroleum companies in the upstream activities use the actual year basis. The actual year basis, that is, it runs from January to December. If the year of assessment is 2010, the actual year basis, the basis period will be 1st January 2010 to 31st December 2010. But for new business that are just operating, maybe the business commence in July, you have to start from July, maybe July 2010, you have to start from that date of commencement. That's why I said if the business is a new business, you start from the date of commencement to 31st December of that same year. So that's that about that. Just know that petroleum profit tax is actual year basis. Now let's go to the applicable tax rate. The applicable tax rate is 85% of chargeable profit for petroleum companies. 85%. But where the company has a production sharing contract with NNPC, the applicable rate is 50%. Though there are some other rates used in practice, there are some other rates, but for examination purpose and as a student, you focus on the 85% of chargeable profit. So, treatment of losses of petroleum profit tax. Petroleum profit tax can be carried forward indefinitely, unlike the company income tax, where losses can only be carried forward to the maximum of 4 years. Though it has been abolished now, the new losses can be relieved indefinitely for companies not involved in petroleum activities. But for companies involved in petroleum activities, that is the upstream sector, upstream activities, you can relieve loss indefinitely. Are you getting it now? There is no restriction to the amount of losses you can relieve. That's that about that. The next thing I'm going to do now to make this work very, very easy for students to understand, I'm going to give us a format of how to prepare a petroleum profit tax question, how to solve it, how to compute it. to compute the chargeable profit and stuff like that. Now this is the format for the computation of petroleum profit tax, and for the computation of the chargeable profit, the adjusted profit, the assessable profit, stuff like that. Total income, you just have to jot this down. You can see the allowable expenses. Though it is not limited to this. There are more allowable expenses which will be shown during the course of this lecture. So this will be displayed to us. Now, in order for you to calculate petroleum profit tax, there are some tips I would like you to know. You must know how to calculate some things. The first thing is how to compute the total income of a petroleum company. The second one is how to compute education tax. And the third one is how to compute capital allowances. If you know these three, I bet it with you, you are 70% close to the full computation of petroleum profit tax. Now let's start from computation of total income. Now the total income of a petroleum company comprises of four things. The number one aspect of it is value of chargeable oil. That's number one, the value of chargeable oil. Under the value of chargeable oil, you can split it into two. The first one is export sales of crude oil, and two, local or domestic sales of crude oil. Value of chargeable oil means that the amount of oil you sold, either you export it or you sold it locally within the country, within Nigeria. For export sales, the number of barrels exported times adjusted posted price. Now there is a thing about adjusted posted price that I would like to explain. In order for you to determine the adjusted posted price, look at the formats to use. Post the quality of crude oil depends on the API gravity. That is, the higher the API gravity, the higher the quality of crude oil. If the API gravity, if the standard API gravity is 36 degree, and the API gravity, the crude oil you want to export is, let's say, 40, you see that the crude oil you want to export has an higher API gravity than the standard, than this. Definitely you are expected to sell it at an higher price above this posted price. Now, the posted price will be established, will be determined after following the guidelines of the Federal Republic of Nigeria, so that the price at which the barrels, the price per barrel is set, will be fair enough. So, if, let's assume that your posted price is $40 per barrel, and the standard price of this, the API gravity is 36 degree. That is, if you want to export 36 degree of crude oil, you are going to sell it at $40 per barrel. But if you export something above 36 degree, let's say 40 degree, definitely you are not expected to sell it at $40. You are going to sell it above $40 because the oil has an higher quality. But if the crude oil is that you want to export is 34 degree, definitely you can't sell it at $40. You have to sell it below $40. Definitely the higher the API gravity, the higher the posted price. Are you getting it now? So there are some situations whereby the posted the standard API will not be the same with the actual. In that case, you have to adjust for the posted price. That's why I call it number of barrels times adjusted posted price. And how do you adjust? You adjust using this format. The posted price, you write it down. The standard API, the actual API, you check the difference. Then you multiply it by some amount. Don't worry, whenever I do some illustration, you understand better. Just relax. Now, the second, remember I said value of chargeable oil is we can categorize it into two: export sales and local sales. For local sales, the number of barrels sold times selling price per barrel, that is posted price, not the posted price of the crude oil exported. They will give you the posted price for local sales. Your question. Having said that, remember one is value of chargeable oil. I said we can split this total income into four. Number one is the value of chargeable oil, which I split it into two. The second one is value of liquefied natural gas. Value of liquefied natural gas. That is, if you sell gas, not the normal type of gas that we use to cook. That's why they said liquefied natural gas. That is still in its liquid form. Yeah, in order for you to determine the value of natural gas, you are going to deduct the allowance from the amount you sold. And in order to determine the allowance given by the federal government of Nigeria, it depends on the load factor and the gas factor. These are the allowances given by the government. If you sold gas that has a load factor of 50 degree, this is the allowance. For 60 degree, this is the allowance. 70, 80. If you sell a gas, or if you sold a gas lower than 50 degree, there is no gas factor. If you sold a gas higher than 80 degree, there is no gas factor. Definitely the load factor would be between 50, 60, 70, 80. And there are some instances where the gas factor, you can see that where the load factor can be 52. You can see that you can't see 52 here, but there are some formula you are going to use to determine that. Are you getting it now? So I will bring an illustration out after during this lecture that will comprise all what I've explained on petroleum profit tax, so that you are going to understand better. Just stay tuned. The third one is the value of oil disposed. Value of oil disposed, that's the third one. Remember, the first one is value of chargeable oil. The second one is liquefied natural gas, the value of liquefied natural gas sold. The third one is the value of oil disposed. Now, whenever oil is being transferred to the refinery, that is when you are going to calculate your value of oil disposed. Do not calculate value of oil disposed whenever oil is not transferred to the refinery. Are you getting it now? So in order for you to calculate that, I wrote this will be calculated whenever crude oil are transferred to the refinery through an oil pipeline. You have to calculate three things here. The first one is the value of oil for royalty purpose. Value of oil for royalty purpose. And under this, in order for you to get that, you multiply the number of barrels you transfer to the refinery times adjusted posted price. That is the one that we solved here, the adjusted posted price that I explained earlier here. Can you see the adjusted posted price? The second one is the transportation cost, and the third one is the maintenance cost. In most questions, you will be given the maintenance cost of the whole refinery. In order for you to get the maintenance cost of that portion you transfer to the refinery, you are going to apportion it. But during the course of this lecture, you understand better. Don't worry, an illustration will explain everything in depth for you. The fourth one is miscellaneous expense, miscellaneous income or other income. That is all about computation of total income. Remember, it is 4. Value of chargeable oil, which I categorize it into 2, which is export sales and local sales or domestic sales of crude oil. And I told you how to determine your adjusted posted price. The second one, remember I said it's 4. The second one is value of liquefied natural gas, which I have explained. And the third one is value of oil disposed, that is if you transfer oil to the refinery. And the fourth one is the miscellaneous income. Now the second one of the important things you have to understand, or you have to know how to calculate, is the education tax. How to compute education tax for the purpose of petroleum profit tax. Now, for the purpose of computing education tax, of computing petroleum profit tax, education tax is an allowable expenses. You can see it is part of an allowable expenses compared to the normal company income tax computation that you are aware of. The normal company income tax computation, the education tax is not an allowable expenses. We don't put it in allowable expenses. But under PPT, petroleum profit tax, education tax will be considered an allowable expenses. And always remember that education tax is 2% of accessible profit. 2% of this. Can you see accessible profit? This is the accessible profit. Now, in order for you to determine that, there are some formats you have to follow before you can calculate education tax. You see, education tax is 2% of taxable profits, but in order for you to calculate that, you use this format. Now, the adjusted profit before education tax, remember we are following this format. The adjusted profit, remember you have to use education tax to be 2% of this, and without this you can't get this. Are you getting it now? Without this assessable profit, the government said, okay, we'll use 2% of assessable profit, so 2% of this, but this education tax is part of what is being used to compute this assessable profit. So in order for you to determine that, you have to use 2 all over 102. That is 2 all over 100 plus 2 of the assessable profit before tax. So adjusted profit before education tax, this is the format. You deduct your loss relief, you add your balancing charge, then this gives you your assessable profit before education tax. Same thing as this. That is adjusted profit. You just say adjusted profit before you include this, then the loss brought forward, then the balancing charge to give you the same format. Have you seen it? So same format. We are using same format. So you just use 2 over 102 of assessable profit before education tax. We give you your normal education tax. The next one is the computation of capital allowances. So, as we all know that capital allowance is charged, is granted in lieu of accounting depreciation. So, for the purpose of petroleum profit tax, there is nothing like initial allowance in petroleum profit tax. We only have annual allowance. Are you getting it? So, for the purpose of petroleum profit tax, capital allowance comprises of annual allowance, investment allowance, balancing allowance, and unrelieved capital allowance brought forward. So, for annual allowance is charged each year. From that word annual, that is the form of allowance that is charged each year on a qualifying capital expenditure over the tax life of the asset. The rate at which the charge is to be charged is 20%, which means 5 years. At the end of the 5th year, 1% of the cost of the QCE is expected to be retained for each asset. Now, the meaning of this is from year 1 to 4, you are going to charge 20 years. You are going to charge 20%. But for year 5, you charge 19%. Under the company income tax, we are expected to retain 10 naira if you are doing company income tax. But under petroleum profit tax, you retain 1%. So that's one of the difference between petroleum profit and company income tax. Are you getting it now? So in company income tax, computation of capital allowance, you retain 10 naira. But in petroleum profit tax, you retain 1% of the cost of the QCE. And the percentage is 20%, irrespective of the QCE. And mind you, we have only 4 categories of QCE, that is qualifying capital expenditure, in petroleum profit tax. The first one is pipeline and storage. The second is building. The third one is plant and machinery, and the fourth one is tangible drilling expenditure. Anything apart from these 4 is not a qualifying capital expenditure and cannot enjoy capital allowance under the petroleum profit tax. In a nutshell, annual allowance is 20% and it will be 5 years. It will be granted 5 years, and which you have to retain 1% of the cost. The next one is investment allowance. Remember that investment allowance is always charged once. Under the company income tax, investment allowance is charged on all plant and machinery incurred for the purpose of production. But for the purpose of petroleum profit tax, investment allowance will be charged on all QCE, not only plant and machinery, all of them. Now, in order for you to charge the investment allowance, look at the investment allowance. This is charged once in the lifetime of a QCE. Once in the lifetime of a QCE. The applicable rates are as follows. Onshore, 5%. Onshore means on the ground. On the ground. Offshore, that is inside the ground. It now depends on the depth. If it is between 0 to 100 meters depth, you use 10%. If it is 101 to 200, you use 15%. Then 201 above, you use 20%. Are you getting it now? There is an interval of 5%. So you must learn all this offhand. Now, restriction to capital allowance. Now, in company income tax that you already know, the restriction to capital allowance is 66 2/3 for other companies and 75% for manufacturing companies. Are you getting it now? Of accessible profit. But for the purpose of petroleum profit tax, the restriction of capital allowance to be granted will be the lower of total capital allowance and B, 85% of accessible profit less 170% of investment allowance. Now, when you deduct it, the lower between these two, that's what you will charge as your capital allowance. Do you understand now? So in a nutshell of what I have explained, I explained that you have to know your total income, you have to know how to compute education tax, and you have to know how to compute your capital allowance. So let's go to an illustration that will help us to understand more on how to compute this thing before I go into a comprehensive illustration on how to compute petroleum profit tax for the upstream activities. Remember, petroleum profit tax only deals with upstream activities. Now, the question will be displayed right now. So, Food Oil Development Company Limited has provided the following reports in respect of its operation for the year ended December 31st, 2010. The company produces 40,000 barrels of crude oil per day, of which 85,000 is sold into the export market. The remaining was sold to the local market. The crude oil has an API gravity of 31 degrees. The standard API gravity of 36 degrees attracts a price of 45 naira in the export market. It has been agreed that for every degree rise or fall in API gravity, price will be amended by 20 kobo. See, the posted price for local market was 8 naira 50 kobo. That is for the local market. The company delivered 900,000 barrels to the refinery out of the volume available for the local market. Remember, they said you sold 85% and the remaining to the local. Definitely the remaining will remain 15%. Out of that 15% available to the local, this place told us that you transfer 900,000 out of the 15% to the refinery. You can see that this transfer to the refinery, we have to calculate value of oil disposed since we transfer to refinery. Are you getting it now? The refinery, which has a capacity of 50 million barrels, was completed at a cost of 15 million and is to be depreciated at 5% per annum on straight line basis. On straight line basis, the cash maintenance cost was 700,000 for the year. It was also reported that the cost of transportation through the oil pipeline is 1 naira 50 kobo per barrel. The company entered into a gas contract with a company based in Sicily, Italy, The contract worth 4,750,000. The load factor of the gas is 59 degree. Now you will see that this is value of liquefied natural gas. You can see load factor. Definitely we have to calculate value of liquefied natural gas. We have to calculate that. F, schedule of qualifying capital expenditure provided is as follows. They've given us this, the pipeline they bought in 2010, onshore up to 100 meters. These are the offshores and these are the onshore. This pipeline they bought it in 2010, that is this current year. You can see current year, this year that you are preparing account, that is the year they bought it. Pipeline 2006, this one is located, they bought 3. One is up to 100 meters, the second one is between this, then this one is above 200 meters. Tanker here, so we have all this. The now said required. Determine the total income for the purpose of computing the petroleum profit tax liability. And B, determine the capital allowance to be granted for tax purpose. Note, accessible profit is 47 million naira. So our first requirement is computation of total income. Now, in order for me to compute the total income, remember I said we can split it into 4. I said value of chargeable oil, which we categorize it into 2, which is export sales and domestic sales. The second one is value of natural gas. The third one is value of oil disposed, and the fourth one is miscellaneous income. So in this question, you will see that the company exports 85% of what they produce. Definitely you have to calculate export sales. They've even given you the API gravity. That's the one. Definitely you have to calculate the adjusted posted price. They've given us local market sales. We have to calculate domestic sales of crude oil. In a nutshell, they've also given us that they transfer oil to the refinery. Hence, we have to calculate the value of oil disposed. And the last was that they've given us how they transferred gas. They sold gas. Definitely, we have to calculate the value of natural gas. So those are the things we are going to calculate here. So the question says that the company produced 40,000 barrels of crude oil per day. 40,000. Now what I just solved here is that the barrels sold in a day is 40,000. If I'm to calculate the barrels sold in a year, I have to multiply the 40,000 by 365 days to give me the number of barrels sold in a year. Now, remember the question says 85% is sold into the export market. So 85% of the 14,600,000 barrels will give me this. Then the local sales, if 85% is sold to export market, definitely the remaining 15% will be sold locally. And in the question, they told us in the information D, they told us that the company delivered 900,000 barrels to the refinery out of the volume available for the local market. This simply means that of the 15,000 or the 15% remaining, the company deducted 900,000 out of this. That is why I deduct 900,000. Definitely the local sales is 12 million, that is 1,290,000 barrels. So to determine the value now, I have to determine my adjusted posted price. I have to determine the adjusted posted price. Remember, I gave you a format of how to calculate adjusted posted price. So adjusted posted price, look at the format here. This is how to calculate it. Posted price here. The posted price in this question is 45 naira. They said the standard API gravity of 36 degree attracts a price of 45 naira. So you write your 45 naira, which is the posted price. The format again, you have the standard API gravity. Standard API. You have a standard API gravity of 36 degree. And we have actual API. Actual API of 31 degree. The crude oil produces an API gravity of 31 degree. Definitely there is a shortfall of 5 degree. And they said that for every degree rise or fall in API gravity, price will be amended by 20 kobo. So the next thing, here we have a decrease in API. So you have to reduce the posted price because the standard API is higher than the actual API. So reduction in posted price. That will be 5 degree times 20 kobo. Hence we have 1 naira. So you deduct it. So my posted price is 44. Adjusted posted price is 44 naira. That's my adjusted posted price. So for export sales now, value of export sales I will have to multiply 12,410,000 times the adjusted posted price based on the formula that I gave earlier times 44 naira. For domestic sales, we have for domestic sales I have 1,290,000 barrels times the posted price for local sales. We have 8 naira 50 kobo. So this is the for domestic sales, which means the value of natural gas. Now in this question, the value of natural gas. Information E, the company entered into a gas contract with a company based in Sicily, Italy. The contract was what? This, and the load factor of the gas is 59 degree. Remember I gave you a format for the computation of the value of gas. The format is the value of gas sold less allowances. And in order to determine the allowance, you will use this load factor and gas factor to compute the allowance. Now you see that 59 degree, which is the load factor, you can't see it directly here. So we have to use some mathematical approach. Assuming the load factor is 50%, we can use 16.9% to determine the allowance. But since 59% is not here, we have to use some mathematical approach to solve this. Now you see that the gas factor, the load factor is 59 degree. So 59 degrees between 50 degree and 60 degree. So the first thing you will write is 50 degrees. 50 degree. And 50 degree is 16.9 degree. 15.9%. Remember, we are going to 59 and we only have 50. Definitely we are still looking for 9 to make it 59. So you write your 9 degree. Now your 9 degree will be used. You say 50 minus 60 because 50 is between 59 is between 50 and 60. Are you getting it now? So 59 is between 50 and 60. So the remaining 9 degree, you say 50 minus 60 all over their percentage. 16.9 minus 15.9. Hence we have, if you should do this now, remember I told you that the value of liquefied natural gas will be determined like this. Value of gas sold minus the allowances. So the load factor and the allowance depends on the load factor of the gas. When I said any load factor lesser than 50 degree or above 80 degree will not enjoy any discount or allowances. So, and based on the question above, we have a discount of 59 degree, and we can't find 59 degree directly here. Assuming the discount is 50 degree, now we can apply the 16.9 directly. But since we do not have 59 degree, we are going to use a mathematical approach to solve for the 59 degree. I have two ways of solving it. So the first way is this. 59 degrees can be located between 50 and 60. So the first thing you are going to write your 50 degrees. 50 degree, then you write the percentage. Percentage is 16.9. Then it remains 9 to make up 59 degree. Then you say 9 times between 50 and 60. Look at the percentage. The percentage of 50 is 16.9 minus the percentage of 60, 15.5, all over 50 minus 60. What I'm trying to do here is that 50 is 16.9, then 60 is 15.5. That's just what I'm trying to do. Then everything gives you 59 degree. So let's solve for this. So you deduct. Hence we have, so this is the gas factor. Now, I've gotten the gas factor. You see that the reason why I deducted it is because the higher the load factor, the lower the gas factor. You can see. Definitely 59 degree, the percentage for 59 degree will still be higher. In fact, this figure here gives you a minus sign, a negative sign. So that's why it gives us 15.64. So if you don't want to follow that logic, you can follow another method. Alternatively, or you can say 50 minus 59 all over 50 minus 60 will be equal to the percentage for 50. You know it to be 16.9%, and the percentage for 59 you don't know. You let the percentage to be x. Percentage for 50, 16.9, minus for 60 we have 15.5. then you solve normally. This one will be minus 9 divided by minus 10 will be equals to 16. This one will give you 1.4. Then you cross multiply. Then here we have minus 9 times 1.4 will be equals to minus 10, 16.9 minus x. Here we have minus 12.6 will be equals to minus 169 plus 10x. So we collect like times minus 12.6 plus 16.9 will be equals to 10x. Here we have a 156.4 is equals to 10x. Divide both sides by 10. So your x will be equals to 15.64. Same as this. You can see. Same as what I got here. So in order for us to determine the value, remember we are picking this. So here we are still going here. We only find the gas factor. So the value of gas sold is 4,750,000. And the allowance or discount, remember we got 15.64%. So 15.64% of this, of 15.64% of 4.75 million. So this is the value that I'm going to write for natural gas. 4,007,100. So the next one is the value of oil disposed. The value of oil disposed. Remember I said once crude oil is being transferred to the refinery, that's when you are going to calculate your value of oil disposed. So in this question, the company delivered 900,000 barrels to the refinery. 900,000 barrels to the refinery. And I said once this has been achieved, you are expected to calculate 3 things. Value of oil for royalty purpose, that's 1. 2 is the transportation cost, and the 3 is the maintenance cost. Here, 2 and 3. So that's that about that. So we have to calculate value of oil for royalty purpose. Remember the formula: number of barrels transferred to the refinery times the adjusted posted price. So the value of oil disposed, the first thing we are going to calculate is value of oil for royalty purpose so that's number of barrels transferred to refinery times adjusted posted price. So number of barrels transferred to the refinery is 900,000 barrels. The adjusted posted price based on what is being calculated, the adjusted posted price is 44 naira. Based on what we calculated. So the second one is the transportation cost. So based on this question, they said the company transported the crude oil through an oil pipeline at a cost of 1 naira 50 kobo. So 900,000 times 1 naira 50 kobo. Then the third one is maintenance cost. And I said you have to use a formula for the maintenance cost, which is number of barrels transferred all over total capacity of the refinery times total maintenance cost of the refinery. Assuming they've gave you the maintenance cost of that 900,000 barrels alone, you don't need this formula. But since they did not give us, they gave us the maintenance cost of the whole refinery, so we have to use this format. So number of barrels transferred. The number of barrels transferred to the refinery is 900,000 all over the total capacity of the refinery. Total capacity of the refinery, they said the refinery which has a capacity of 50 million barrels. So 50 million barrels times total maintenance cost of the refinery. Total maintenance cost of the refinery. The maintenance cost is 700,000. The cash maintenance cost was 700,000 for the year. So this is the total. Then you put it here, then you total everything. Ma? Yes. So that's that about that. So that's the first requirement. So the second requirement is we should determine the capital allowance to be granted for tax purpose. We determine the capital allowance to be granted for tax purpose. For the computation of capital allowance, you look at the qualifying capital expenditure. Now, the pipeline that was purchased in 2010, and mind you, the account we are preparing for is 2010. So this is the first annual allowance that this asset is going to enjoy. So this is the first year. So pipeline 2010. This is the first year. How much? 15 million. So you remember the percentage is 20% of 15 million. So 20% of 15 million is 3 million naira. The second one is pipeline that was purchased in 2006. Remember, all assets are expected to use 5 years. This one that was purchased in 2006, from 2006 to 2010, that's how many years? 6, 7, 8, 9, 10. This is the 5th year. So in the 5th year, I said earlier that we are to use 19% of the cost, the total of 13 million plus 14 million plus 15 million. So this is the result. The third one, we have a tanker that was purchased in 2009. Tanker in 2009. So 2009, 2010, that's the second year. So that's 20% of 15 million. That's 3 million. The third one is building. The fourth one is building. Building. 2005. That's it. From 2005 to 2010 is 6 years. So this one has enjoyed his own annual allowance. So you don't need to compute here because he has enjoyed his own annual allowance. So he's in 6 years. And remember, all assets are expected to use 5 years. Now, the next one is motor vehicle. From what I explained earlier, motor vehicle is not part of the qualifying capital expenditure. Motor vehicle is not part of the qualifying capital expenditure. So I'm not going to include motor vehicle as part of my QC. So the total annual allowance is 13,980,000. Remember, I'm to calculate investment allowance also. So always calculate investment allowance in the year that you purchased that asset. Now, the asset you purchased in 2005 would have enjoyed its own investment allowance 2005. And remember, investment allowance is once. The asset you purchased in 2009 will have enjoyed its own investment allowance 2009. Same thing applies to 2006. But look at 2010. We are doing for 2010. Definitely, we bought this pipeline in this current year. So, we have to calculate our investment allowance for pipeline. And the pipeline was located above 200 meters. Remember that I gave you some percentage for investment allowance. So this is the investment allowance rate, onshore, offshore, like this here. So you see that the asset was located above 200 meters. The asset was located above 200 meters. The pipeline. So, and the percentage is 20% for 200 meters. They say 20% of 15 million. So that's 3 million. Definitely the total capital allowance here, since there is no capital allowance brought forward and there is no balancing allowance in the question, total capital allowance is 16,980,000. And remember that the question says that we should determine the capital allowance to be granted for tax purpose. Remember, capital allowance for PPT has restrictions also. And I've given us the restriction. I said the restriction is total capital allowance and be the lower of this and this. So we have to do the restriction. So restriction to capital allowance. The restriction to capital allowance, lower of A, total capital allowance, which is 16,980,000, and B, 85% of accessible income, 85% of accessible profit. What is our accessible profit in this question? Accessible profit is 47 million. So the accessible profit is 47 million. So then you less 170% of investment allowance. Your investment allowance is 3 million. Based on this, the capital allowance to be granted is A. So the capital allowance to be granted is 16,980,000. Having learned all this, I think you are 60% in getting close to the full computation of petroleum profit tax. Thank you and God bless you. Please subscribe to my YouTube channel, and if there are any recommendations you like the instructor to work on, you can click on the share button, the comment button below to comment. Thank you and God bless. Also share to your loved ones and those people that are willing to learn. Thank you.